Hello and welcome to a quantumforex.com market overview. This is December 8th, 2013. And you'll see before us here the typical setup when we come look at our charts. Of course, you can decide on however you want your chart set up. But this is my platform, how I look at it. I have my Euro USD and my Pound USD at the top. USD being the second currency. At the bottom I have my US Swiss and my US Yen. This is kind of my navigation portal that I start with because if I see, and I put all these up on the 4 hour, so I can see kind of the immediate trendings of the market. You'll notice I have the EMA 62. If you right click here, you can see that's MA 62 properties. And if this is your first time with us, or if you're new with us, just stick around and you got all the videos to watch, and you have these market overviews. But from now on, I'll be coming out Saturday evening, so you'll have them Saturday late evening, Sunday early morning. So you'll be able to get these well in advance of the market. But as you continue to stick around with us, you'll see how I set things up. These are set up somewhat as advanced charts, so you're going to have to watch the videos and you'll get a feel for what I use and how I use them. But basically, as a brief overview for those that are new, the blue line is the EMA 62. Now I also add, as a moving average, I'll also add in a 200 EMA exponential moving average 200 to use in further analysis. But this is a base analysis that lets us see where the USD, the major USD pairs are moving relative to each other. So EMA 62, EMA 62. Now, being that the bottom pairs are USD primary, meaning the USD shows up first, they should be trending the same direction, and the ones on the top should be trending the same direction because their USD is secondary. However, that clearly is not the case. So this automatically shows us there is some discrepancy in the market, that there's some disagreement in the market, that the fundamentals are probably not necessarily lining up with the technicals and vice versa. And so this tells us the market is not very safe to trade. Doesn't mean we can't trade it, it just means we need to use caution. And actually, because of this kind of a market, if you know how to spot, it actually presents some wonderful opportunities, kind of some slingshot effects, as the market is going to try to come back into unity. Now, something to keep in mind is this is the second week in December, and we've just come out of non-farm payroll, which is the first Friday of every month, and so we've come out of that. So we've had a lot of fundamentals hit as far as the news goes all of last week, especially on Friday. So the market could be in a disarray. So there can be opportunity this week to catch some pips when the market's coming back into unity with each other. So what we want to find out is really which currencies are kind of going the way the market should be going. Okay, what do we base that off of? Well, if we're dealing with USD major pairs, obviously knowing what's going on with the dollar compared to its basket of currencies, pound, Canadian, yen, Swiss, and so forth, it'd be good to know. So this is going to work in an effort to try to keep this video typically at about 20 to 25 minutes. There's going to be a lot I can't cover, and there's also going to be a lot I'm going to shorten and condense. So again, ongoing education, keep watching the videos, keep watching the market overviews, and keep asking questions. And for those of you who are seeing this on these videos on YouTube, please go ahead and comment and ask your questions, and you can sign up for the channel. Okay, so we see this USD pairs. We can see that the Swiss and the yen are clearly going opposite directions. And if we look on the daily, let's pull these both up to the daily, we can see that's been going on for quite some time. Yen has been going, or Swiss has been going down as yen has been going up. And we'll get into the US yen pattern here. So let's look at, the best thing to do is look at the US dollar index, USDX. Okay, and again, here we have the 4 hour, and you just see a lot of whipsaw and consolidation. Go to the daily, look at all this consolidation. Really just a consolidated channel, but it does appear that it is consolidating somewhat sideways and down, meaning that we would expect, without further investigation and analysis, we'd expect this is a retracement consolidation, and we'd expect it to move out the top, having impulsed above the last lower high. We impulsed up, and we're actually, if we were going to use our market flow entry system, so if you don't know what that is, and that's fine, you'll learn, we'd be looking for a 50% retrace, which we're already there. Okay, so on a daily chart, if we were going to go and just use that system on the daily chart, this would be an entry point. Now, many people would like to see this drop down to 61.8 or 78, and if you're just trading the dollar index, you could go ahead and buy. I'm not suggesting that, but what I am suggesting is that we use this as an analysis tool to say, okay, well, the dollar has been retracing in a bullish daily market. Okay, we were bearish as we were moving down, as we're making new lows, but now the dollar has impulsed above the last high. So this is the lower high right in here. We've impulsed above it and we've retraced back. And clearly this is an impulse with these large blue candles, very, more than a 45 degree, well, at least a 45 degree angle up. That's a strong impulse. Now we're doing this wide sideways retracement is clearly a rest in the market. For those of you who are newer, we have our impulse or trend, and then we have a retracement against the trend, which is considered a consolidation phase. And if you just, even a new person that doesn't know much about Forex can see that the price moved up faster than what it's moving down, clearly showing an impulse trend direction and a retracement. Now this isn't always 100% accurate. Nothing in trading, whether it's Forex, stocks, futures, ETFs, and by the way, everything I'm showing you here in these videos can be used for gold. I might get to gold today. Can be used in the energy markets, Forex, stocks, ETFs. If you want to even, it can even be used to trade any instruments, any financial instruments at all. Okay, so any time between now and the 78-88% would be a time that you could expect this to continue moving up if it follows normal protocol. Point being is that we are looking for a bullish move up to continue with the US dollar index. Now, that's information that's nice to have if we're looking at what would the overall direction of the US yen continue to be. So let's move into an analysis of the US yen. Can't really analyze too much long term on the 4 hour, so we'll go ahead and pull out to the weekly. And now I'm going to zoom out using this zoom out tool here to really be able to show you a pattern. And we use Elliott Wave in our courses, and clearly you can see a wave 1, 2, wave 3, and then this triangle is what we would call a symmetrical triangle, and that is a very common wave 4 experience. And then we've moved out of that, and I've been calling this bullish move out of this triangle now, as many of you know, for a few months now. And indeed, it's happened these last few weeks, and so there's been some pips made on that. What we are likely to see is some retracement and then a continued move up. Now, this projection is actually pretty easy to find. If you know the language a little bit, we pull back from the top of wave 3, this Fibonacci tool, to the bottom of wave 3. There we go. Sometimes it takes a few clicks to get it. And we're actually looking for a 127% is our standard first take profit. And notice how that nicely comes up into this resistance levels right in here. And we actually call that the 127, 138% zone, where 80% of the time you're going to get at least some significant retracement, if not a complete reversal from wave 1, 2, 3, 4, 5, and then an ABC coming back down somewhere around the top of wave 1. Typical. Not always, but that's typical. So with that in mind, we are bullish on this for the next, well into next year. The question is, how soon are we going to get there? That's just something nobody knows. You can use Fibonacci time patterns, but you know, that's a whole other study. So we got about 890, let's say roughly 800 to 900 pips left to go on this move on the weekly chart. So do we have fundamentals to back this up? Certainly. Bank of Japan is flooding the market just like the US did, and they're looking to devalue the yen. And as we can see also, the US dollar, as we looked at the index over here, does look to be putting in a bullish continuation pattern to continue on with this impulse move. And the question, how far would that go? Well, if you measure the first wave, usually, because wave C or wave 3 is typically at least or longer than wave 1, we could imagine that this next wave will at least be as long as the first wave. Okay, so that's a good gauge when you're looking at the US dollar being bullish. Well, with the fundamentals telling us the yen is bearish, in other words, decreasing in value, and the technical showing us the dollar is coming into a bullish move, we should expect this easily to hit its target, this US yen. Does that mean it's going to go straight up from here without pulling back? No, certainly not. It could, and the yen is known for long trends. But we are probably in a wave 5, okay? And so as this was wave 4, I'll show you wave A, B, C, D, E in wave 4, and then the blast out. So this would be the first leg of wave 5. We're looking for 1, 2, wave 3. This could have been wave 4, maybe. So as we move up above, this should be completing the first wave of wave 1. So we are looking for that wave 2 pullback. So this is on the daily chart. You could just wait for this pullback down into the EMA 62 area. Different ways, of course, to qualify that, and then buy from there and be in for a nice, probably 1,000 pip ride up to the 127 like I showed you. Or you might even be able to find a 4-hour retracement pattern and short this down into a support level. Different ways to play that. And of course, not time to get into all that, but I did want to show you the resistance levels, that the 127, 138, wave 1, 2, 3, 4 consolidation, a 5 wave up. So the US yen is definitely looking bullish. Okay. The US Swiss is clearly going the opposite direction of the yen, and also of the dollar is looking like it's going to turn bullish anytime. So with that in mind, if we come out to the monthly, we can see we've been going a sideways channel on the monthly on the yen, on the Swiss. Here is the weekly, and as we come down to the daily, you can see we're very close to the bottom for a double bottom. Now, many of you know double bottoms are oftentimes a great opportunity to buy, and this could be no different. We're at the bottom of the stocks on the 5. I don't use the 20 and 40. I use the 5 and the 95, and we're near the bottom. Now, we don't have divergence. The blue line is the momentum oscillator. We like to see divergence. Don't have that, but we do have some possible candle patterns developing. So I would not myself, I wouldn't look, here's an hourly rejection candle. Personally, I wouldn't look to just buy this. I would like to see some things happen, some price action showing me. But on the hourly, we do have this divergence. We are at the bottom of the stock. So some people might want to go ahead and put in a predictive buy there. You know, close range stop loss could be good. I'd like to see a little more action on that first myself. Okay, if the dollar is looking like it could go bullish anytime in the next week or two, and it's definitely in a consolidation slowdown pattern, then we might also see some other activity bullish on the Swiss, bearish on the pound and the euro. Let's see how that goes. And I'm going to start speeding up here because I got to get through some things. So where we're at now, let me show you. It's very possible that we are putting in 50% here, retrace, and now look at this on the monthly, this rejection candle off the EMA 62. We haven't fulfilled stocks on the upside. So we very easily could be putting in a continued bullish run up to the 88%. Now, if that is the case, and we're also bullish on the US yen, look to buy euro yen on retraces. Okay, and if we come down to the euro yen, you can see readily that it is experiencing some strong bullish movement because it's impossible for the US yen to go bullish and the euro USD to go bullish without the euro yen going bullish. It just can't happen. Notice how strong our bullish movements have been on this currency. Okay, so ideally you want to buy any dips. If we get a drop back down to support level like in here, we're at 135.22, EMA 62 is there on the daily. Wow, great opportunity to look for a rejection candle and to buy. Okay, so I am kind of leaning towards a bullish maneuver, continuing on the Euro USD, simply because of the monthly. But that of course, if we come down home to the daily chart, there's also an opportunity. You can see we're at the top of stocks on the daily, and you can also see here that the 50% has been hit, bounced off of, and moved back up. You want to look for a short of that 88. Look to qualify it. Okay, make sure that it's got a rejection candle. Make sure that you've maybe got a 1, 2, 3 setup, whatever you're using to qualify that. But that would be that 88% around 137.80 is where you're going to want to look for a short. We are at the top of stocks. Now it's on the daily chart. You want to pull down to the 4-hour. Make sure you have divergence. Make sure your higher lows are taken out, that sort of thing. Again, as you follow this, my videos, you'll learn more about that. And also, if you ever decide to take one of our courses, you can learn all that in our courses. Okay. Now, the pound USD, to come out to the weekly, you notice this great rejection candle at the weekly. Okay, spinning top right there, bam, right at the 113%. So that is a possible opportunity for a nice retrace. Remember, we're still looking at the potential of this to move on up, being that we came in a wave 1 or A, and then this long sideways A, B, C, and we might be moving up into this area. Can't really tell yet. We're still in, again, December can be a lot of wacky technicals can come out because of major consolidation time and lack of volume in December. So especially this week, great, especially as we approach the last 2 weeks of December, it's probably wise to just kind of chill out and put longer stops or not trade altogether. So can't really see much on the daily here, but some people could be short right now simply off of the predictive. But at the same time, we might want to see if this isn't going to move up to the 127 before it drops off. This would be a great opportunity to look for a short of the 127. Or if we continue to move down and then put in an ABC retrace. So I'm hesitantly bearish on the pound right now. Okay, the real trades I'm going to get to right now. Let me see what time we're at here. Okay, 18 minutes, we're still pretty good. So let me indulge a bit in the Aussie USD and the Aussie yen. I think we've got some really nice trading opportunities here for this month even on the Aussie. First I just have to, there we go. Okay, dropping down to the weekly. You can see we moved up and down, so we've got a possibility of a nice double bottom. You can see our strong divergence. If we come down to the lowest candle here, this is our swing low. Notice we had divergence on the momentum oscillator and on the stochastics. Looks like we've moved up in a possible 5-wave, clearly taking out the lower high. So we're bullish on the weekly. Okay. Come down to the daily. Here's our possible 5-wave. 1, 2, 3, 4, and 5. Now, notice my rectangle up here. I put that there months ago because this was where we had expected our fifth wave to top out to begin to short. For a review, let me show you why. Top of wave 3, back to the bottom or beginning of wave 3, and notice how beautifully that comes into the 127, 138% zone. I just described that on the previous chart of how we use those as a predictive zone. Doesn't mean just because it gets there I'm going to short. Now I could short a small amount of lots and set that up just as a predictive short. But you can see how nicely it came in there. And then look at this nice reversal candle. This is an engulfing, bearish engulfing reversal candle. Okay, you'll learn as I talk and teach, I continue to teach about candlestick patterns, but also in my course material, we have some candlestick lessons. And this is just one of those you want to know, this engulfing pattern right in here. Started and stopped and played out, engulfing this bullish candle. So then we continue down to what you'll see is an 88%. Okay, so we're looking then wave 1, 2, 3, 4, 5 makes up an initial impulse wave, and then either a wave 2 or a wave B back down. And now as we pull a Fibonacci from the very bottom to the very top of this last impulse wave, you notice we hit between a 78 and 88%. Now if we go to the weekly, we got a rejection candle. Okay, that's a long wick short body rejection candle. A lot of different names we can call these, but long wick short body, then we have long body, we have no bodies, those are the what we also call doji, and then we have group candle patterns like the morning star or the evening star. And so we like to group these so we don't have to remember 500 different names, but just 3 or 4 different groups of candle patterns. And the key is they're all reversal candle patterns. Okay, so what we're really looking for is the beginning of a move up. Notice the stocks. Okay, we not only have divergence, but we bottomed out on the stocks at the 5. Notice that it just blasted right through the 20. That's why we don't use the 20 very much. The 20, actually here it got obeyed, but you know, look up here at the 95. So we like the 5 and the 95. These are extreme overbought. At the 95 are extreme oversold. So we hit that, and now we've retraced. So we've broken the lower high, moved up, retraced. Anytime between the 50% and the 88% is our buy zone. Okay, and that's where we want to look to qualify. We did have a rejection candle at the 50. Okay, but if we went down to lower time frames, more than likely that would have not qualified. But that is one qualification you could have bought here, but your stops would have to go behind your swing low. That's a lot of pips for some folks. So easier to qualify on the lower time frames. In this case, we've got a rejection. You've got a high probability it's going to move up from here, simply because you have divergence, you have the stocks. The only thing I don't like is the time of year. But that's why then I would go down and be a little safer, move down to the daily, check out the pattern, notice some nice bullish movement, drop down to the 4 hour. Okay, where's our lower high that we want to see taken out? Right in here. Moved up, moved down, moved up, and broke. So this is our lower high. You could choose one of these. Safest is here, but this also works. Okay, so ideally you want to see, nice rejection off of that. Shows that the bulls are really pushing and they're in control, and they've got momentum at this point. Now look how we're coming into the 80 and we're pointing up on our momentum and up on our stocks. That is a very good indication, plus we're above the EMA 62, that we have volume moving our direction and that this should continue up. My guess, this week we'll continue to see movement to the upside until we get up into the 95. Then as our stocks begin to turn down, I'd want to look to drop some of my profits, bring my stops tight, and possibly start looking for a lower time frame shorting opportunity as this rides down for a 1, 2, 3 point setup and gets ready for its longer term blast up. Okay, and longer term I mean by we're looking on this. Isn't it interesting how we just moved right up to that EMA 62? So I'll teach more as we continue on the EMA 62, also the EMA 200. Okay, what we're looking for with the Fibonacci tool is an extension We're looking again for a minimum of a 127 move up. That would be an ABC retrace, if this is only an ABC. More than likely it's not, but if it is, that still, if we put in a buy right here, where we're currently at, and our stops down here, that'd be a 300 pip stop loss. For our first target is 900 pips. Okay, that's a 1 to 3 risk reward ratio. For those of you that want to take trades once or twice a week, or even once or twice a month, this is your trade. This is the trade to get into for December. You could buy, stops 300 pips, 1 to 3 risk. Now, may I suggest that if you're going to do that, go ahead and put in 2 sets of lots. Not just 2 lots, but however, break it down into 2 sets. Put 1 set, stop loss it right behind the low rejection of this rejection candle. Set the other stops down here. Risk no more than 2%. 1% is preferable. If you risked 1, put a 0.5% risk stop here, 0.5% here. Okay, that just allows you to have 2 different stops. It allows you to compress your risk reward ratio a little bit, and that way see if you set a stop half your lots, which is still a pretty high probability because you're setting behind a rejection candle, 150, then this first here at 900, that's actually a 1 to 6 risk reward, which puts you in a fantastic position. Noticing that the stocks went over at the 5, we'd expect those to continue up to the 95. So wherever we look to take our first profit, we're also going to look to see if those stocks are making it up and approaching the 95. Okay, time frame wise, 26 minutes. We have to wrap this up. And I just want to show you then that a real powerful opportunity then also awaits us on the Aussie yen, and then this will be it, and we'll let you go get back to work here. But the Aussie yen, this is the daily chart. Notice we've impulsed, broken the previous high, consolidated backwards, and pow, we blasted out of it. So much so that you can actually see this open. We gapped on the open today. So what we want to look for is really at this point any retrace. Okay, I wouldn't notice we just blasted through the 80, should continue up for a little while until we get over that 95, and then look for a little bit of sideways, drop down. If we drop back down, say into the EMA 62, any kind of support, I would look to buy. Why? Because our US yen looks to go up to the 127. That's another, sorry, I forget, I think it's 600 to 800 pips, I forget now, since we've covered a number of currencies, but I think it's 800 pips more, at least. And then our Aussie yen, our Aussie USD looks to continue its movement up. So the Aussie yen has no choice but to go up. So in this case, I would certainly not try to buy this right now. That's what we call chasing a trade. But if we get a nice retrace back down into any support level, any place you can qualify a buy, I would not hesitate to go ahead and buy the Aussie yen. And let's look at where this could go to. Okay, if we're just looking for Fibonacci retracements, pull from swing high to swing low. Okay, we're sitting at the 50 and we consolidate around there. The next stop really would be the 78 to 88 areas. I should say that would be the likely. I suppose the next would be the 61.8. Okay, look at that nice weekly rejection candle, somewhat off of the 62 EMA. So you can see how we use a number of different techniques. So that's still another 400 pips. Okay. You can see how we use a number of different techniques. Stochastics being these here, momentum oscillator. I can show you at some point how to put them on the same level here, overlay them so that they save you some space on your charts. We use Fibonacci, retracements, extensions. We use support levels. We use candle patterns, rejections, and group candle patterns to get a feel and how to put those together. Again, stochastics, you can see we're heading towards fairly nice incline of the 95, which also indicates that we've got a good room to blast into at least the 9800 area. Okay, I'm going to have to quit now. I'd love to keep teaching, but I don't want to make these too long. And we will see you in the next update video. Keep watching the channel for some more updates. God bless. Have a good week.